That's the biggest reason why I use Top Step, is because simply the interface is good. When you look at it, it's buy and sell. Add your contracts, cut your contracts. You can drag your stop. You can drag your take profit. Versus like some of these other ones, like the interface is just horrible. It's like I compare it to like Netflix versus Hulu. Like Hulu's interface is garbage in comparison to the Netflix. So really, that's the biggest reason. And the biggest reason I like futures myself is simply, I'm just going to leave it on this page because the slideshow one's messing up for some reason. There's no theta, aka time decay. And this is why prop firms come into handy, because there is no set contract price. You're either long or you're short. There's no options chain, so it streamlines your thinking. You know, for me, when I was trading options, one of the toughest things for me was I was always like, oh, should I trade Microsoft? Should I trade Google? Should I trade Apple? Now, again, this Discord helps narrow that down a lot. But for me, I always was getting FOMO for not picking the right stock to trade that day. So when it comes to futures, I specifically just trade the indexes, NQ and ES. So, and maybe I'll look at IWM from time to time. As of recently, that's mainly KT influenced. But, you know, it just really kind of helps streamline your thinking. And, you know, markets move together. So when you're trading an index, if you see one market going against the other, it kind of gives you a red flag that maybe I shouldn't be looking at this right now, because we're not having, you know, good symmetry with the markets. So again, either long or short, no options chains. The thing that can be tough with futures is your losses aren't defined. With options, your losses are defined by the contract price. Futures are $1 per point amount. And have endless buying power. So when you're trading options, it takes 24 hours for that money to settle. When you're trading futures, it settles instantly. So it can become easier to blow accounts with futures because your money just keeps settling. You can go on tilt for forever until your money's all gone. Not, you know, when I was trading options, you're limited to your buying power. And usually that can prevent tilt. So with futures, that can be one thing that you can struggle with. But it's just, you know, just know that, and it's adjustment. And there's lockout features. I like the Top Step lockout feature. Like if I've made good money within a certain period of time, or I just know the markets aren't favorable, I'll just lock myself out. Then I have no choice of what to do for that day. So, and again, they're, you know, with options, your loss is defined by the contract price. You buy a contract for a couple $100, that's your max loss. Futures can just keep running. So that's why they, you know, brokerages require different equity amounts. And that's why prop firms can kind of step in and be like, hey, you don't have 50 grand to play with. And if you're just starting out, nor should you, because as you know, in this game, you're going to lose money to start. So you might as well lose money in a safe environment. So futures contracts are either micros or minis. You'll hear people talk about minis a lot. I trade micros. There's plenty of money to be made with micros. I trade NASDAQ, the NQ specifically, NASDAQ. So with NASDAQ, a micro contract is $2 per point. Every point the NASDAQ moves, you're getting $2 per contract. On a mini contract, that would be $20 per point, so 10 times the size. Quite gnarly. I would not recommend that to start because you can scale in and out easier with micros versus minis. I trade between 5 and 10 micros. Plenty of money to be made with that. Especially when you look at my risk reward. I look for 50-point moves, risking 15 points. You know, this game is all risk reward, as we know. So, you know, I can risk 15. I'm looking to catch 50 if it's a good setup. That's about a 4-to-1, 4.5-to-1, something like that. You know, you want to have a minimum 3-to-1, but for me, I like having a 15-point stop, looking to catch 50-point moves. I know people are always trying to catch like 7,500-point moves. That's just not realistic. Yes, they can happen, especially in this current market. But if you're trying to fish for 100-point moves all day, you're going to get chopped up left and right. So starting out, trade micros. And even when you're first starting out, trade between 1 and 5 contracts. That'd be my recommendation. And again, just to go more on prop firms, they come in because of these high equity requirements. Again, learn to trade on a paid combine, bowling with bumpers, if you will, like I say. Paper trading is pointless. I say this for forever, and I will continue to say it. The hardest part about trading is psychology, feeling the stress of losing money or making money. Paper trading eliminates that. So if you're taking out the hardest part of trading, what are you really doing? Maybe do it for a brief moment. What was that?
No, it's kind of, remember we were talking first and I was like, it's kind of like comedy where it's like, you could practice your jokes or be a writer. You could even be funny at the table with your friends. And I'm like, once you're on stage, come on. It's like,
it's a different animal. Exactly.
So,
I do compare trading to comedy a lot. If you guys don't know, I did stand up for 12 years. That's how I met KT, funny enough, coming to my shows at the Hollywood Improv. And it's exactly right. You can sit in your living room, go through your set, stand in front of a mirror, go through your set, and this is going to be great. But it all goes off the rails when you feel that crowd and you feel that pressure and you feel the lights on you and you start to trade on and you start sweating it. You start feeling your blood pressure rise. Your heart starts racing. Like, can you perform in that environment? So that's why just with comedy, you can practice in your living room all you want, but you're not really anything until you can get up in front of real people and do it. And just like trading, until you're trading real money, it doesn't really say anything. It doesn't mean I'm not saying don't practice your jokes, don't practice trading, paper trade a couple contracts just to see how to put an order in or to see how quickly things move. But at the end of the day, it's not really going to help you. Because again, you're taking out the hardest part of trading, which is the mental side of it, feeling those losses, feeling the excitement of a winner and being able to hold a winner and those kind of things. So when it comes to prop firms, people always ask me, like, how much money do I need to trade? I would say set aside $1,000 to $2,000. You could have a prop firm for months at that kind of money, versus if you were trading for real, you'd lose between 10 and 25K in those same losses, So it's just, you need to be able to afford those losses for a period, and you only learn from losing. Just like, again, like comedy, you don't learn when you go up there and kill. You learn when you go up there and you eat shit, and then you go, damn, what did I do wrong? Let me reverse engineer this and see where I messed up or where I can be better. Trading is the same. You only learn from losing, so you need to be able to afford that for a period of time. And again, a prop firm helps you do that. And why I prefer futures and the indexes, like I was saying, no implied volatility, no theta. When I was trading options, I often would get the move right, but I wouldn't get it right in the correct amount of time. And as you know, that's going to chop you up, especially if you're trading 0 days, right? And when I traded options, I traded weeklies. Every day of the week trades differently when you're trading options. If you're down 5 points on Monday, it means less than if you're down points on a Friday, right? So futures, it trades the same every day. It's a point system. So you can really define your risk and your reward because you're not going like, oh, it's Thursday, I'm now down 40% on the same move. I'd be down 20% on Tuesday. And again, I'm not knocking options at all. I know most people in this Discord trade options and do very, very well with it. But these are the things that I struggled with options. So with coming to futures, it kind of helped me see it clear and learn setups better because I wasn't like chasing different options chains or chasing 12 different tickers and that kind of thing. So everyday trade's the same with futures, which is not the same with options. And markets move together. That's why I trade NQ and ES. If I see ES selling off and NQ is pumping, that ticks something off in my head to go, oh man, am I missing something or should we be moving into something different here? And markets move together, right? So individual names can run counter to the market for a number of reasons. We all know that, whether it be earnings, news, Trump tweets something about tariffs with a specific industry. Individual names can run all over the place. It can run counter to where the market is heading. So when you're trading, for me, I like trading NQ and ES for that reason, because when markets move, they move together. When it comes to my charts, they're very simple. I leave VWAP on. I set hourly levels. Previous day high and low. I mark the intraday previous day high and low because people always think, what's the high and low on futures? There is no high and low. It runs 24 hours. I mark the intraday high and low on futures. That's just something I started doing, I don't know, like 6 months or a year ago, I want to say. No one pointed that out to me. It was just something that it just makes sense, right? Like, how high did we go yesterday during the trading hours? If those are the hours I trade, I want to know how high or how low we went. And because at the end, price action is king. So my strategy is very heavily based on following price action. So let me pull up a different little thing here because I'm kind of going through the futures thing quickly, simply because I assume most people in here know enough about trading just in general. So let me go into Actually, let me pull up my charts real quick. I'm going to show you guys how I set my chart up before I go into a certain setup. I'll go through that, and then I'll go through my favorite 2 setups, and that should be a good amount to get things started here.
Yeah, I like how when, we'll be in the Discord saying, whatever, and you're like, I see what you guys are trading. Those aren't my setups that I like to, I've gotten wrecked on them before. I'm not comfortable with those. I'm learning from you guys, but that's not what I'm trying to do right now. Like, I'm paraphrasing what you said, but like the self-control is huge. And then you come in the next day or 2 days later and you're like, this is the price action I was waiting for. That's like, I love that.
Yeah, it is helpful to see what's going on. I like seeing like what's going on in the Discord. If there's big moves happening, like what are you guys talking about, or those kind of things. So it is helpful, no doubt. Let me just take a screenshot of this real quick, just because I haven't journaled my trades yet for the day, and I want to make sure I journal this correctly. Can you guys see my chart? Yeah, you can. All right, cool. Let's hit this on here. My computer's running a little slow now because, all right, download image. Whoops. There we go. I'll deal with that later. Okay, so I'm just gonna go and show you guys how I just reset this chart. This is NQ, obviously. And this is a system that I learned on setting these levels from my original mentor, Jake Ricci, aka Rake Trades, if you guys know who that is. So you'll just see these blue lines are hourly level. The yellow is previous day high and low, and the white line is the opening print. So first things first, we can get rid of yesterday's high and low, or Friday's high and low. Those are out. So let's go ahead and mark the new high and low from today. Bam. When it comes to marking the high and low, obviously the wicks matter. Otherwise, they do not. And I'll get rid of the opening print because today is done, so we'll get rid of the opening print. So when I set hourly levels, I'm looking for trend changes on the hourly. Where are we going from green to red to green? And then any level that gets cut through during the day, gets a body closed through, is deleted. So these levels are now gone. 23,575, that's out, and 23,534 is out. So simply, when it comes to setting hourly levels, here's what we'll do. Pull this up here. First thing, going from red to green. This is the first bar of the day, 8:30, 9:30. So we go from green to red right here. It's a very small body on that candle. I'm going to mark the top of the body of that red candle right up here. And I have my setting to where it locks at the top, obviously. And honestly, that's the only level that changed for today, because we went from green to green here. So that's going to be the only level that's going to change for today on NQ. Otherwise, if, for example, this was a red candle, we look from red to green, green to red. If we're going from red to green, we would mark the bottom of the green candle body. So that would be right there, right? And then green to red, the top of the red candle. And then this is all down pressure. So no levels being set here. This is actually not a real level. I just put it in for example purposes. But does that make sense? It's pretty simple, but that was like the basis of the Rake Trades Mastermind, which I'm not knocking as a course, but that was a $2,000 course. And that right there was a big, big part of it. So, people are trying to think of like how certain traders set levels. If you've read anything by Al Brooks, it's very similar to Al Brooks and how he does things. So, and as you can see, my charts are very simple because my system is more based on patience and discipline than anything. It's reading price action. So you're going to see VWAP and levels, and that's it. And I'll mark the opening print. And then I look for setups around these levels. So let's go into what setups I look for. I'm sure you might be familiar with a couple of them. but these are two. I only use 4 setups in total, and I'll go over 2 of them today. The break and retest and the 1, 2, 3. I'm sure you've heard of them. But to go into more detail, the basics of these setups, first and foremost, they must be with trend. Not all sets are created equal. People will see a break and retest or a 1, 2, 3, but then fail to look to their left and realize what the price action leading up to that setup is. Like, yeah, there could be a 1, 2, 3, but are we in an uptrend or are we in a downtrend? Are we in a favorable trend for that setup? So that's why I say not all sets are created equal. You can get stopped out left and right on these if you're not paying attention. So they must have the proper strength and the proper risk reward. Just because I see a break and retest happening does not mean I take it. Or just because I see a 1, 2, 3 developing doesn't mean I take it. It has to be the proper risk reward. It has to be a defined stop loss within 15 points on the other side of the level. And the next level has to be at least 50 points away. If levels are only 20 points away, I'm not even going to trade that day. I'm just going to sit there and wait until we clear a bigger resistance point and get out of that chop area. It's just not worth it. Like, you might, if you're going to risk 15 points to catch 20, I mean, what's the point of that? So just because you see a setup happening doesn't mean it has proper risk reward.
Yeah, the best.
So
way,
I would say,
to understand
sorry, what was
risk
that?
reward for me, it was I saw people doing like $100,000 trades, and they make like $2,000, and I was like,
yeah,
dude, what the hell?
That's a really popular thing on Twitter, or just I mean, honestly, just in the whole fintech space. In all honesty, you see these people making like massive trades, and they're making maybe 5, 10K, but they're risking 50 grand or 100 grand. Like, that's not. I'm far more impressed by the trader who can make $30 off of $10, or can make 300-400 off of $100. Like, yeah, that's a small account, but if you can make $300-400 risking 100, then once you can master that, now you just scale up and do the same thing for forever.
Yeah.
You never change your approach. You just add more size.
Yeah, because
you're not just, I think it's an unfortunate thing. What was that?
That $2,000, or let's say $5,000 off of 100 grand. Listen, all of us would be happy to make 5 grand, but that $5,000 goes against you, and the next day you have a $12,000, $14,000, $17,000 loss. It doesn't make sense to do.
Exactly. It's like it works until it doesn't, right? Like, oh, I made grand, but then it's like we all know you're going to take losses in the game. Like, losses are the cost of doing business and trading. Like, there's not a lot of overhead to trading, and you treat it like a business. Your overhead or your loss. So, there is no overhead other than your education you want to pay for if you want to, Discords you might be subscribed to, and your Wi-Fi connection. That's it. That's your investment. But your cost of goods sold is your losses, because they will happen unequivocally. They will happen. It's just going to. But you got to keep them small. Most of my loss days are under 200. Most of my win days are over 5. So that, just following that math, you can see like, oh, that's a profitable system, right? And honestly, most of my loss days are, in the last 2 or 3 months, have been under $100. I'll lose like $70 or $50, and I'll be like, okay, this is not worth it. I'm out. I'm going to go do something else for the day. So your losses will happen, but you just have to be able to afford them. So first, my favorite setup that I look for all the time, first and foremost, is the break and retest. And I literally have these note cards taped on the backdrop of my office. So above my screens, I have all my setups, and of course my rules down a wall. So literally write them out, draw them, and tape them to the wall. It's almost like having an offensive coordinator holding his playbook in front of his face. You can see the market doing something. Okay, well, I want to go with this play. I'm going to go with this play. And I only use 4 of them. And each one has an aggressive entry and a more conservative entry. So on this break and retest, 4 steps. Step 1, are we in a trend, and what is it? If I'm going to go long, we better be in an uptrend. Just because a break and retest is happening, if it's in a sell-off, you might be catching a falling knife. So we want to see that trend in our favor, whether it be up or down. So step 1, identify that trend. Step 2, a strong candle close over the level. So that level being an hourly level or previous day low or previous day high. Me personally, I do not treat VWAP as a level. I've seen price get cut through it way too many times. VWAP I leave on because it's a good guide. Where are we heading for the, what's the average price for the day? And a lot of traders do follow it. So if we're hanging above VWAP and all of a sudden we get below it, doesn't mean I'm going to get in a trade. But now my senses are raised to a possible downside trade. What was that?
No, nothing. No.
Okay. So generally, I will not go long if we are below the opening print and below VWAP. And same thing the other way. I'm hesitant to go short if we are above the opening print and above VWAP. So that's again, I don't trade those as levels, but those are my guides. If we're above or below those, I want to know that and see, okay, are we going in the right direction? Is the trend in my favor? The famous line, the trend is your friend, right? So in step 3 with this, we need to see a reasonable pullback about 15 to maybe 25 points below that push up. Larger pullbacks are simply too wide and are indicative of chop. So if we're looking at this break and retest, I'm looking at this candle 1 right here, this green one. I want to see this push no more than 15 to 20 points above that level. And then when it comes back, I don't want to see it go much lower because, again, if we start taking this candle out, now we might be seeing a downside move. So we want to see this push up past the level, but not much below it because we want our stop loss to lie on the other side of the level. If you can enter perfectly at the level, great. But no matter what, you want your stop loss on the other side of the level, no matter what trade you're taking, whether it be an upside or downside. Like here, we'd want our stop on the other side below. If we're going short, we want our stop above the level here. And again, we want to make sure that initial break is, if it breaks 50 points past the level, a break and retest is probably off the table because now it has to retrace 50 points to get back to your level. And that's not reasonable. That might just be a different move altogether. So that's, again, why not all setups are created equal. If this breaks and goes way past the level and then retests, that's not necessarily a good break and retest opportunity. That's just, those candles are simply too wide. And so that break has to close above the level too. If you're just, I still fall for it sometimes. I'll try to enter a break and retest before the 5 minute, and these are based on the 5 minute. But again, applicable to all time frames. But I enter trades based on the 5 minute candles that are setting up here. I do follow the 15 minute for longer time frame trends, but I do not take setups on the 15 minute. I have to see them on the 5 minute. I'll watch the 2 minute here and there, but that can be a dangerous game. The 2 minute can chop you up. So I don't take 2 minute setups either. It just gives me an idea. If I see something develop on the 2 minute, it has to confirm on the 5 minute, and then I'm more interested. So again, this has to close. If we break above a level, it needs to close on the 5 minute, and now we see a reasonable pullback. We'll enter here, and then hopefully it pushes up, right? And if it doesn't, we have a reasonable 15-point stop loss below the level, or maybe 10 points if you entered 5 points above the level, whatever. You can put in a limit order at that level to catch it perfectly. So that's the more aggressive entry on the break and retest to the upside. The more conservative entry would be if it sweeps. If we see this break and then it starts wicking down below, towards the end of that candle, we enter as it sweeps above. And as long as it closes above, we're still in the trade. But if this second candle closes below the level, I'm out. It could be indicative of the trade going against me. Same thing with the downside. If we're breaking below and it starts wicking up past it, as long as towards the end of that down and closes below, we can enter as it sweeps. So that's what we want to look for. And again, the closes are so important. I've found myself catching or trying to enter a 5 minute candle a little too early. And you just get chopped up because it might just wick right back up on you at the last second. So it's almost like a football game. Like if you're losing in the first half, it doesn't mean you're going to lose the game. And, I tend to like to buy, if these setups are developing, I like buying toward the end of, I don't like buying a 5-minute candle setup and there's 4 minutes left on that candle.
Dude,
I like to do it towards
that.
the second half of it.
I was just about to say that.
I'm sure, yeah, KT, you do something similar?
Yeah, I will be like, oh, this looks so good, but it's 3 minutes and it's only been 90 seconds of the 5 minute, right? It's like, I need the 2.5 minute mark. I will look at the 3 and 2 and just be like, okay, that the first couple minutes is closing nicely, and then go back to the 5, make sure it's there, and then the last 90 seconds of the 5 minute, I'm looking to enter for sure.
Yeah, exactly. Those are the best times to enter, is that third and fourth quarter, if you will. Like, again, if a team comes out and they're up, 17 points at halftime in a football game, doesn't mean they're going to win the game. It means they're in good shape, but that could very well turn against them. So that's why I like waiting to the end of those candles. And then for me, I often will see if there's a trend change on the 5 minute. That's usually my stop loss when I'm holding a runner. And that's, to me, when the setup fails. So like on this here, if this was to break and then we wick all the way past this, it's already done for me. Just wait for a better entry. And if you don't get one, you don't get one. And like, honestly, if setups keep failing, that's just indicative of a choppy, crappy price action day. Don't take those trades. It's like, it's okay to sit on the sideline and do that. It's fine. So, or like, I'll go into the next setup from here. If these, even more conservative way to approach a break and retest is wait for it to develop into a 1-2-3 setup. Break and retest often turn into 1-2-3s, aka the 3-bar setup. And just like before, what is the trend? Is the trend in our favor? Yes or no? If it is, like, this has to be building up. If we're going long, we need to see an uptrend into a level and then see a 3-bar setup at the level. Simple as that, right? And you look at here, the first 2 candles, this is a break and retest. But if I'm being more conservative, I might just wait until we develop a 3-bar play. We clear both of these, and now we push up. So that's the ultimate way a conservative way to approach a break and retest, is wait for the 1-2-3 to develop. You'd enter on that third candle as we're breaking above or as it's sweeping this level. And again, your stop loss is going to be, 10 to 15 points below this level. Stop loss always needs to be on the other side of the level of the direction you're. Same thing on the downside. If we're in a downtrend, we push past a level, we retest it. Now I wait for this. I will often sometimes, like, one of my thing I do very often is I will take the break and retest setup and I will add in as it develops into a 3. I did that today as the market was closing. So that's something that I just do over time. Experience can help you get better at that. But if we're seeing a break and retest, take that trade. But if it starts going into a 1-2-3, why not add on another contract or 2? You already have some equity in the trade. So why not, right? There's a great book, The Best Loser Wins, by Tom Hogard. And he talks about how often people add to losers and cut their winners, which is the opposite of what you need to be doing. If the trade is still valid and it's giving you a signal to add in a couple of contracts. You're going to be risking some of the profit you've already made, but it gives you safety that you have equity in the trade. So now your break even is higher. I mean, yeah, you're risking the profit you already have, but you're now going to, if it continues in your direction, which it's giving you the signal that it's going to, there's more money to be made. You're holding more contracts, right? And it's just a way that if you're starting out, enter with a couple contracts and add on as versus people cut them too soon, because you have to afford those losses. They're going to happen. So you need to be able to afford those things because they're inevitable, and that's fine. But we just need to make sure that we can afford them. The options version, I'm sure many people have dealt with. Like, when I see people cutting options trades at 20%, I kind of think like, well, how do you make any money? Because 15 to 20%. So just like with trading, options with futures, I don't start taking profit until, if I'm looking for a 50, I'm not cutting anything until I at least catch 30 points. If I'm risking 15, I can't cut anything until I'm at least at 30, because that's at least 2-to-1. So I can at least afford a little bit more of a stop loss. But again, just always thinking those point system. So just to further reiterate this 1, 2, 3, X, I kind of started rambling about them. Break above the level without pushing too far past it. Pull back to level. It can even fail this level. This can even fail and close below. Now, that would be a failed break and retest. But if it pushes back up and closes, now it's a successful 1, 2, 3. So 1, 2, 3s can be failed break and retest as well. So if I get stopped out on a break and retest, I'm now waiting for a 1, 2, 3 to develop. I'm not going to keep taking break and retest tries. I'm going to wait for that 1, 2, 3. And again, use this on the 5-minute time frame. The setup can be trickier, requires more patience than a break and retest. And again, I often use the 1, 2, 3 to add to positions that did hold the level. So kind of wrap up the setups part of this, and I'll go into my charts and try to find some examples of these. We should have some from today. I already reset my NQ charts, so I can readjust those. But when you're looking for these setups, always calculate your risk reward. Your stop loss has to be defined before you get into it. Your price target has to be defined before you get into it. Again, these are all similar things with trading options, but we want a minimum of 3-to-1 or really a 5-to-1. It doesn't be an exact science, but always know your risk reward. 15 to 50 points, 12 points to 45 points. It can vary, but you can do the math and it works out to better than 3-to-1. Simple as that. And remember, setups we trade are on hourly levels and previous day high and low, not VWAP's just a guide. Or if I'm in a trade, I might cut some at VWAP. If we're in a trade and it's pushing up, that might be something where it could be a point where you're like, okay, this is where I maybe exit some of this trade or whatever. And there's always the aggressive versus conservative entries. You can take either approach. Does that make sense? If you have questions on break and retest or 1, 2, 3, let me know. I'm sure many of you have seen them before. But let me see if I can find some good examples today from ES even. ES was pretty choppy today from what it looked like, though. I don't know if anyone was... KT, did you take some SPY trades today?
I didn't do SPY. Oh, I did do SPY. I did one to the downside on the secondary push up that was a weak push later in the day. Yeah, I drew like after 8 a.m. our time, it climbed up and then it broke the trend line because it rejected the last candle of the day from Friday. That's 645.34. And I said I want above 645.50, which we never got. Basically, the wick highs, those last 2 candles of the day on Friday, we played calls on that. But anyway, so that's why I remembered the level because I was like, watch the closing print from Friday, basically. Yeah, and then so we had this hammer on the 5-minute at 10:40 a.m. Yeah, it's going to be
10:40 your time, right?
1 p.m. yours, I think. To the left, right there. Go to see that hammer?
Oh yeah. Yep.
So
that wick right off the opening print on ES.
Yeah. It was on the 200 EMA on Webull as well, and we were all like talking about it. So I took 2 contracts to the upside there just because I said if we clear that hammer, I'm in. We could get new high a day. Just kind of watching it, made like, I don't know, $80 or whatever. And I was like, okay, cool. Now, then we have the spinning top 2 candles later, right?
Yep.
So that spinning top rejected the same hammer that you just were on, but maybe 4 candles to the left. There was another hammer.
Yep.
Go to the left. Here we go, right there. So that was lost. So you have to clear dojis. You have to clear hammer highs. All right. We never cleared that. So I was like, I will scalp this, but we need to clear that. And if you keep going to the left, 3 more candles.
Yeah, those right here.
There we go. You have a hammer bottom, right? So you have to clear that. And then if you go to the right, 4 candles. Right? One more. Yeah. That rejected the hammer, the inverted hammer. So you never cleared any of the hammerheads. So where I took puts was if you go to the right some more, like 6 candles maybe. The engulfing right there. Right there. I took it. And then I was like, we just engulfed 10, well, more than that, right? All the way from the hammer. We got under that first hammer I showed you. If we stay under that, we're good. The very next candle to the right rejected the first hammer I told you about. That was like, you know, kind of like the first low a day, I guess. Not low a day, but fresh low on the trend. Because I was like, if this falling wedge doesn't break above, it's going to engulf and keep going down. So any engulfing candle the same way of the trend, I'm in flat out. And so these went, I took like 33% was my first cut, and then it was like 40, but they ended up going 100%. It went from $24 to $48. I think.
And this is like, I'm trying to look for
obviously eventually it went, but like the opening print, I was out by the time the opening print really like curled up, you know, way out. So
because we got one right here. Like again, it was teasing us as we're coming down from that same play you're mentioning. We're seeing it wick off the opening print here.
And I just kept telling everybody we're having wicks here, so you have to get in. If you're shorting a downtrend, you have to get in on the wick where it looks like it's going to reverse. It's very terrifying. But if you get in on the low and then you retrace up, now you're down 12% instantly. Like, you know, look at all these wicks on the 5. There's, you know, if you can't stomach that, you have to do 1 day out, you know, and I don't know how the futures contracts works with the expiration and stuff, but I know with normal contracts, it's like, I'm going to do 1 day out because you get that move down and the retrace really doesn't, you know, affect the contract too much because you still have the time on it. So that's
exactly. And so ES moves slightly different than NQ. ES is $5 per point if you're trading micros. So I just adjust the stop loss accordingly. 5 points, looking for 20, right? Or 15 to 20 points. So I look for 15 to 20 point moves. So honestly, if I'm looking at today, there was nothing I would have been interested in unless we cleared 64.82. Because even then, that's a 10-point move. So not totally enough for my trading style. So like the only move I would have caught on ES today if I took it, and I took this on ES, was the break and retest of the opening print later on in the day, which is the continuation of the move that you were already in. So you can see like in the morning, first of all, I don't trade the first 15 minutes of the day. It's often the first half hour because you can see we have a break and retest here that fails. We have a break and retest here that ultimately would have failed on this wick. But honestly, if you came in right at the level on this break and retest at 64.70 and had a 5-point stop, you would still be in this trade. So I didn't take this. This would have been risky, but there is a break and retest like here and then again here. And if you have a 5-point stop on the other side of the level, opening print, you would have stayed in it all the way until up to here. But again, for me, these levels are too close to the opening print to want to take it. I would be waiting to get here and see if we clear it or reject it, which we did. We see a 1, 2, 3 right here below the level. But again, this is not something I would have personally taken because I want to see us get below VWAP and below that opening print. And as we get below VWAP here, it immediately wicked off the opening print, as you were saying. And really the only legit good setup for me today on ES, which again, I took the same trade on NQ because like I say, markets move together, would be this break and retest of the downside right here at 155 going into power hour. I trade on the central time zone, so 3 o'clock market close. We finally did get a break of the opening print. The 5-minute closed. It wicked off on the next 5. And yes, it did get above, but it never closed above the level. It went 1 point above the opening print and then closed below. And then you could have been comfortably in this trade all the way down to 650 something. And that's a 20-some point move on ES, which is a lot. So,
and I was just saying with the engulfing, like, you have wicks on 0 days. You're going from, let's say 30% to 15 for sure. On a 0 day, those wicks are terrible. But then we continue down, you know, this you're like, I'm in the wick, out on the drop, in on the wick. Like you could do that. You know, it's just kind of up to you and how you want to trade it. But obviously the trend was down. When we hit your blue line up top, we never recovered.
Yeah.
And each, like we would have like a little micro chop down, and then the red candles were engulfing. They were strong bodied candles. We never had a green candle that engulfed like more than just one little candle, you know?
Yeah. No, exactly. I don't really draw trend lines, but you can obviously see it. You want to draw one. There's an obvious trend right here, right? So, you know, that's super easy to point out. And so, yeah, like to your point, like once we get below here, again, I wait for more confirmation just for my own, you know, safety sake in this trade. But, you know, below the opening print, our next level on ES was pretty far down. If I, you know, let me see, because we're looking at going to the bottom of Friday, which Friday was a massive move. So obviously we didn't get 6407, but we got, you know, we still caught 20 points off of that in less than an hour, you know? And so if you're trading, you know, I trade 5 to 10 contracts on ES, I trade, you know, 4 to 7. So if you're trading 5 contracts, catching 20 points, I mean, that's $500 pretty easily, right? With not much stress. So I want to see if the NQ one, I already reset levels. But let me see if I can just mark the opening print, because I think we had, oh no, it just went all the way down to it and bounced right off of it. Yeah, there was a level at 534. Where was it at? Yeah, basically right here. I already deleted it, but that was a level that once we broke through it, it just like slammed right down. And so again, I don't treat VWAP as a level, but very well could have. Actually, see how I didn't reset Q yet, so let's see how it did on Q. But again, I did take this early in the morning. It eventually got stopped out. I took this same trade on NQ where we did get a push up. Once we got the first few minutes of the day, we saw this big push up. We got a retest of this level here. I always post the levels for Q and NQ in the Discord every morning because they move together. So once we got above the opening print here, that was a good break and retest opportunity. That continued, but again, just like on ES, once we got to that top level, it rejected and we never got back there. But honestly, today, in all honesty, wasn't a great trading day as far as price action is concerned. So was there money to be made? Of course. But at the end of the day, it was just not the best price action. And that's not surprising, seeing as it's a Monday and we had a massive move on Friday. So for me, like, I often tend to be hands off if we're inside the previous day's range until we break above it. If there's big levels in between, sure. But generally, I try to not touch anything until we get above the previous day or below the previous day, because setups will often fail on those inside days. So going into tomorrow, let me see my hourlies, make sure I have this correct. Yeah, I do. So tomorrow, if we're stuck between, you know, these two big levels, which is a big area, you know, there's not much I would want to touch, you know, unless we see a hard rejection of 23,600. Other than that, you know, I would be hands off tomorrow until we get below 23,437. So that's just how I look at it. I will look at, these are the time frames I use, the 2, the 5, the 15. Obviously look at daily and weekly for your higher time frame, you know, really long-term, you know, trend changes, but, or, you know, trends, not trend changes, but how is the day looking? How is the week looking? I don't swing futures. And I believe if you're trading prop firms, they don't let you swing them anyways until like later on. So you have like, you know, have established yourself quite a bit more. So it's something you have to even worry about really initially. But honestly, the 5 and the 15 are where I hang out, set my levels on the hourly time frame, and that's kind of it. I could go into more setups, but I think that's enough as far as the way I trade is concerned. If people have more questions on it, you know, let me know. But That's really it. It's simply looking for setups on these levels and making sure you have the appropriate risk reward. And that's, I don't give myself more than 2 or 3 stops a day at the most. 3 stops at the most. If I'm taking more than 3 stop losses in a single day, that's just, I'm not on it, or the market is just not good price action. So simple as that. You want to make sure that your risk reward is worth it. And I do leave all these tickers up because these are all companies I invest in long term. So I keep these up. They're also massive companies, as you can tell. So these help move the market. Like, if I see Google and Nvidia or Microsoft pushing up and the market's selling off, that might lead me to believe that this might flip around, So, but I always leave NQ and ES up at the same time, because oftentimes one will bring down the other or vice versa. Like, I believe NQ was pumping up and then ES hit a level today and then they started reversing together. So yeah, always keep them both up. And if you still want to trade, even if you're still trading options, it does help to chart NQ and ES because they move together. So, I don't trade Q and I don't trade SPY, but the whole time KT was talking about the SPY trade, I was looking at the ES chart. I wasn't even looking at the SPY chart. It's the exact same. I mean, there might be a small tick difference, but really there's not much difference at all. So don't be afraid to use futures and prop firms. I know there's a lot of idiots out there as well, just like there is in the options game. But I think prop firms are great, especially if you're starting out. You don't need to have an account with thousands of dollars in it that you're probably going to lose anyways, because when you're starting out, you're going to lose. Simple as that. You might get lucky a few times here and there, but at the end of the day, you're going to be seeing a downtrend in your own performance until you really have a system down. So that's about all I have for like my intro to futures. I do coach this stuff one-on-one more and get into the nitty-gritty more often and review trades and things like that. But honestly, just looking for, those break and retest and 1, 2, 3 around those. If you have questions on how to set those hourly levels, always set. I do put them in the analyst floor every morning for both NQ and QQQ. I do chart SPY and ES every day as well, even though I don't trade SPY, but I do chart them just because it makes sense too. It is helpful. So that's it for me, gang. If you got more, let me know. KT, if you have anything you want to add, let me know.
That's it.
I have a soccer game on in the background, and Liverpool is shitting the bed right now. So
no, thank you so much.
If you want to talk soccer too, we can do that. What?
Thank you so much. Appreciate it, man.
Yeah, man, of course. Good to be here in chat. I mean, I'll do more of these too, sure, if people want, if they have interest in them. And, I'm always down to do these because the more I talk about it, the more I learn and the more I understand and the better I am getting at what I do. So.
Yes, sir. All right. Anybody that has questions on that future stuff, you know where to find Holly in the chat, and appreciate it. Awesome. Thank you so much.
Yeah, and if you want these decks, I can email them to you too. Just send me a message. I can send you the PDFs presentations.
Cool. Sounds good, brother. Do you want to put
Sweet,
up the
man.
features channel, the PDF or the PowerPoint thing? Cool. If not, whatever, we'll get them somehow. But it's good stuff.
Oh yeah, I'll throw them up.
Okay, man. Later.
All right, man. Later. Good chatting.